Hello and welcome. I'm Matthew Smith and I'm Managing Editor at Investment Magazine, and this is Market Narratives. This show is a series of unorthodox conversations with thought leaders influencing the world of fiduciary investors. For more related insights and analysis, please remember to check our website investmentmagazine.com.au and subscribe for a free email. And with that, please enjoy this episode. Welcome, everybody. I'm joined today by David Breach, the new president of Vista Equity Partners, the global investment firm focused on enterprise software, data, and technology-enabled businesses. David serves on Vista's Executive Committee and Private Equity Management Committee and the investment committees of Vista's private equity funds. And while he has taken on this new role as president, he still retains his chief operating officer responsibilities and continues to manage company operational leadership roles. Good morning, or for you in the US, good evening, David.
Thank you so much, Matt. As I like to say, I wake up every morning with a long and varied to-do list, and I'm thrilled if I get to a quarter of it.
Yeah, look, I bet. And look, congratulations on your new role as president. I had the great opportunity to talk to you on our planning call on the day that the announcement came through, and so that was a really great conversation to have. I know you were really excited about that role. Can you kind of describe a little bit about your new role and what you're kind of bringing to the strategic direction of the firm?
No, sure, I'd be happy to, Matt. And as I like to say, maybe from my days studying martial arts, we give people black belts because they've been acting like one more so than they're going to start acting like one. And so I think, Robert, changing my role to president was in some respects just reflective of the work I've been doing at the firm, which I've obviously loved. When I started at Vista 7 years ago, Vista was really at an interesting inflection point at the time. We used to talk about ourselves as having 14 billion of cumulative capital commitments. And, Robert's pitch to me to come join him at Vista was, there's just incredible opportunities to invest in enterprise software, and Vista is well positioned to really take advantage of those opportunities, and that he really needed help making sure that the firm was, ready for those opportunities. And so, as I joined the firm, I really, part of my role was making sure that the infrastructure, the processes and procedures and whatnot were all, being built in a way that we could handle the growth. I think when I joined, we had about 130 total employees. We had, I think, 25 people in what you would call the administration or support functions. As we, are here today, we've got almost 80 billion in assets under management, about 500, a little less than 500 total employees, and the administration side of the firm is about 150 folks. So we've had significant growth over that time period, both in terms of assets under management and people. But I also during this time period really focused on a number of strategic initiatives for the firm. So like most businesses, they start off as founder businesses and founder run businesses. And, we've been keenly focused over the last decade on how do we, move from being a founder run business to really being an institutional multi-product asset management firm in the enterprise software space. So, I've been, partnering with other senior leaders in the firm on evolving the governance of the firm to really empower and spread the management and governance of the firm among a number of, really talented partners. We 7 or 8 years ago, we had a fairly small credit practice, and we really felt that there was significant opportunity. And so I really focused on how do we build out our credit platform? How do we take advantage of that opportunity? So I was a big champion of that and was directly involved in creating a New York office for the firm and, building out our credit capabilities so we could scale it much more significantly than it was. We've also built out what we call our permanent credit platform. So we have fund vehicles that, most of our investing Our investors expect us to, buy companies, invest in these enterprise software businesses, implement our operational improvements, and 4 or 5 years later, sell the companies for an attractive return. Well, there's a whole nother segment of the market where we see companies that are operationally, fairly mature companies, and they're generally vertical focused enterprise software businesses that are well positioned in their market, but what investments can you make in them to keep them well positioned for 20 years? And so your perspective on what you're investing in at the company level and how to achieve that is just it's different. And so we created a permanent capital fund to take advantage of those types of opportunities. And then the other thing that's been really exciting for me is just really being a key champion in advancing the firm's efforts around, DEI, diversity, equity, and inclusion, and ESG. It's an interesting dynamic. There are very few firms, and certainly we're the only firm of our size that was in the U.S. that's been founded by an African-American man. And so needless to say, DE&I initiatives have always been near and dear to the firm, as well as ESG. But again, as we've scaled our business, we've wanted to scale our activities and opportunities in those areas. And we believe in enterprise software, we're at such an inflection point to make change and positive impact. And we really have this notion of kind of software for good. How can what we do not only obviously, make attractive returns for our investors, but how can we impact society at large? And so it's exciting for me to be part of those initiatives as well.
Yeah, definitely. And you've touched on a few points there. Really looking forward to digging in a little bit further on. Certainly the ESG and inclusion conversation we'll get to in a moment. But yeah, firstly, I mean, one of the things that probably, a lot of private equity funds and asset owners here who work with private equity might be interested in is this kind of idea of the portfolio and the ecosystem, and how you can use that ecosystem to perhaps kind of supercharge some of the companies you're working with and some of the founders. I know that this ecosystem is something that Vista's kind of known for. Can you give me a little bit of an insight into how that works and a little bit of the secret sauce behind that ecosystem?
Yeah, well, I'm not sure I'm going to give you any secrets on this podcast, but I'm happy to talk about the ecosystem. So,
yeah.
When Vista started 21 years ago, there was kind of two key premises to the firm. Number one, that enterprise software is a really attractive type of company to invest in. And I think at that point, most people had not, really understood what makes enterprise software so attractive. And then secondarily, that if you bring, operational rigor to these companies, that you can generate attractive returns on a very repeatable and predictable and consistent basis. So as we go 21 years forward, that is still the fundamental thesis of Vista. And so how do we do that at scale is really what the ecosystem is all about. So, back in the day, we'd buy a company, we'd go to work on helping that company, operate more effectively and more efficiently. And as we really saw the opportunity, it was like, well, how do we scale that? We can't do it, one at a time. And so that was the concept of the ecosystem. So when we think about the ecosystem, there's a few parts to it. So number one, people talk about kind of the Vista, quote unquote, the Vista playbook, which is really a reference to, we've got over 100 of what we call Vista best practices that are different, operating perspectives on what we think a well-run software company looks like and how they ought to operate. And we literally have documented white papers and libraries that, we can provide these to our executives to say, here's some things that we have found are effective. How would you apply those to your company? Secondly, we have the second kind of leg in our ecosystem is what we call Vista Consulting Group. So we've built out over time a consulting arm that's captive to our firm that is right now numbers over 100 folks that are their focus is helping our companies effectively implement best practices in those companies. And so being able to bring that expertise in Vista best practices is the next part of the ecosystem. We obviously, many firms have operating partners. We have a group of really talented operating partners that, again, spend all of their time focused in the enterprise software space, and how do we work with the management team, work with the board, work with Vista Consulting Group to really help drive these operational transformations. Another key element of our ecosystem is our C-suite executives. So we have over 150 C-suite executives that have worked in more than one Vista investment, and in certain cases, they've done 3, 4, 5 tours of duty with us. And so having that ecosystem of executives or that bench of executives that are steeped in how Vista thinks about running software companies is another part of the ecosystem. So you pull all that together, and you've got kind of a comprehensive approach to how do you help companies make operational transformations at scale. And then the other thing we do that I think, again, is very unique in the industry is we have, we call them best practice sharing seminars. And, obviously in COVID, we've unfortunately had to do some of these virtually, but we have these summits or seminars where, right now, I think we own 70 portfolio companies. We bring, all of the, sales leaders together. We'll bring all of the product development leaders together. We'll bring all of the CFOs together, all of the CEOs together in these summits where, folks get to be in a room with, 70, 80, 100 other executives who are, basically running similar companies. I mean, there might be different industry verticals or might be different horizontal applications, but they're fundamentally, operationally similar companies, and they can share with each other what are their opportunities, what are their challenges, what things are they doing in their companies to help meet those opportunities and challenges. And so it's a very unique opportunity. There's not many, and this resonates a lot with founder, a lot of software businesses, when we invest in them or when we acquire them, we're acquiring them from the founder or we're investing with the founder. They have very little opportunity to sit with 70 other CEOs to talk about what are the challenges they're facing in enterprise software. So, when I think about the Vista ecosystem, that I think, without giving you any secrets, that's the Vista ecosystem. And I've not, there's obviously a number of folks that invest in enterprise software, and in 2021, the investment world has woken up to how attractive enterprise software is as an asset class. But I think our ecosystem is pretty differentiated in the market. Yeah,
because I want to ask you in a moment a little bit about kind of valuations and how you're perhaps able to, extract value out of your investments. And I suspect, some of the tenets you just discussed there will perhaps come out in that part of the conversation as well. But I just wanted to shift gears for a moment and speak a little bit about our Australian local market. Asset owners here in Australia are getting bigger and laser focused on outcomes for members in light of new legislation and regulatory reforms kind of coming in, Your Future, Your Super, and some other things. What are some of the ways that you can partner with asset owners to get quality returns? And do you have any examples of partnerships you're doing in Australia?
Sure. So, I think one of the things that we've observed as we've, participated in the Australian market and we really see a number of the investors that we work with, in particular, a number of the supers, as being, really highly sophisticated investors that when we talk to them, about what makes enterprise software so attractive, whether it's the, recurring revenues, the long-term contracts, the resiliency of these businesses, they really get that. And so when I think about how we're partnering, part of it is what products are we bringing that are really solving a need, and how, does what we do in enterprise software help them, help them with their investment needs. Secondarily, I mean, our companies are at the forefront of what's changing in various industries. And so, we work with our investors on, what insights can they learn about other industries, because most of our companies participate in some other vertical industry. So we might have a business that participates in the rental real estate market, in the automotive claims and insurance market, what have you. And so we get insights into these industries that I think our investors find interesting and helpful to them beyond just their investment in a Vista fund, but how can it help them in other investments they might be making. But the other thing that we've seen that I've really been excited about is how we've partnered on co-investment. And, a lot of investors talk about wanting to do co-investment. Oftentimes co-investments are done at discounted basis. And so obviously from an investor standpoint, it helps them, average down their cost of fees across the amount of capital they're investing. But what we find is that, while many investors want to co-invest, the way that these transactions operate, you really need, smart, sophisticated, nimble investors to be able to co-invest with you if it's going to be a successful program. And, we found with some of our partners in Australia, some of the supers, that we've really had that partner, and we've had some really, I think, exciting co-investment transactions that I think have been a win-win. And I think the side benefit of these transactions is well, investors obviously do diligence on any fund that they're going to invest in. When they actually go through an underwriting process on an individual asset, they really see in a granular manner how you approach investing. And some of the feedback we get from our co-investment partners when they've actually gone through an underwriting with us of an asset is just really positive feedback. And I think it further helps solidify the relationship. And I think it further helps our investors appreciate what we think makes us a differentiated investor. And so, as we look forward, we're continuing to look for opportunities to create these co-investment opportunities, but we're also, thinking about, what products do our investors need, and what can we develop for them that will be differentiated and that will be something that maybe they don't have today in the form that we can provide it to them, given our focus on enterprise software.
Yeah. I mean, it sounds like you're actively working with some funds in Australia. Any you would highlight in terms of, case studies or examples of partnerships that you've done that seem to have worked quite well?
Yeah, so generally, most of our transactions, unfortunately, have lots of confidentiality agreements around them and whatnot. But I will just say as an example, Australian Super has been an investor in our funds for a number of years, and they've been a very strong co-investment partner with us, and we've really appreciated their approach. And I think we've been able to bring them some interesting investment opportunities that they've been able to take advantage of, and it's worked well for both of us. And the other nice thing about some of these co-investment opportunities is that the enterprise software market is growing. It's been growing at roughly upper teens 20% per year for the last decade.
Wow.
And if you look at Gardner and some of the other firms that do projections, it's expected to continue to grow at that rate for as long as you can accurately forecast. And so it's really emerged as the largest part of the global economy. And so there are some really interesting companies that are too big for us to acquire on our own. And so when we've got good co-investment partners, it opens up a set of transactions that we wouldn't be able to do just with our own capital. So again, we've found it to be just incredibly beneficial to both our investors as our co-investment partners as well as ourselves.
Yeah, really interesting. Look, I want to ask you a question. You mentioned it at the top. This idea around ESG and diversity and inclusion. You mentioned just then the performance profile of this sector, and obviously it's quite phenomenal. But from a cultural perspective, there has been some question marks broadly over technology, right? So what are some of your observations around technology's journey, just generally as a segment, but then your own ESG journey as a ESG journey as a firm? I mean, it's quite mature now. So can you talk to some of the learnings that you've had and some of the ways in which you're implementing from a diversity and inclusion and ESG perspective in the contemporary context and looking forward?
Sure. So I'd say, speaking broadly about the industry and not really talking about Vista specifically, I think when you look at either technology or asset management, neither one of them are going to get, a gold star on, where they are from a DEI perspective. They're two industries that I think have been, generally, lagging the overall, performance of the business world at large. And so we view that as a great opportunity for us as someone who's participating in those two markets in terms of, kind of how can we really be a leader and how can we really inflect, significant change in, both the asset management world and, the tech world at large. Before I talk about what we're doing, I think the other issue that, I think tech is dealing with, and I think this is really more what I'll call on the consumer tech side of things more so than the enterprise software or enterprise side of things, is really, privacy has just continued to be a significant issue. And when you look at, the Facebooks and the Googles and some of these others, I think different countries are wrestling with, what should privacy look like? What should the privacy framework be? How do you make sure people understand what their privacy rights are and how their information is being used? And that's been a big topic of conversation in the United States. And, I don't think the tech community, nor do I think most governments, have really sorted that out. You've obviously seen certain places, EU in particular, in the US, California. The state of California has been driving some of these initiatives, but I still think that's a very evolving area. And at times, you really wonder: do consumers understand fully what's going on, and do they care? And I think I kind of look at my kids and I talk to them about these issues, and they don't. They kind of seem to accept it is what it is, and they don't seem to care as much, or they don't have as much sensitivity because it's all very native to them. Where I think some of us that grew up in a world where, your information was not being tracked all over the internet, it's much more, kind of concerning and foreign to us. So I think that's going to be an area that's going to be interesting to continue to watch and see, how governments and legislatures sort that. In terms of, I guess, kind of turning this back to, kind of Vista and ESG and DEI. So again, from a DE&I perspective, it's always been something that we've been focused on, given the founding of our company and our founder. But we've really looked at, how can we, really drive this in a very focused and measurable way. So, one of the things that we, as an asset manager, one of the things we wanted to look at, well, what are the things that we can control and really inflect directly? So one of them, for example, is, board diversity. So we own 70 companies. Has 70 boards of directors, and, most of our companies have outside directors. And so we really, several years ago, put a focus on how are we going to increase board diversity. And, we really looked at it from a standpoint of, okay, sure, we can move the numbers, but are we actually creating opportunities? Because, one of the biggest issues for someone to join a board, and in particular in a public company context, the first question that most people use as a screen is, well, tell me about the other boards you've been on. And so if you're someone that hasn't had access to that world, that becomes a barrier. So as we've looked at, how do we enhance our board diversity? One of our core tenets was, we want to create opportunities for folks that it may be their first board membership, but, we're going to train them on how to be a good board member. We've got other programs and whatnot. Yeah. So I think as we sit here today, I think over 70% of our boards have at least one female member. And I think 85% of our boards have at least one, person of color. So we want those both to be 100. But, I think we've made really good progress in that regard. And one of the things that a lot of our DE&I efforts really focus on the pipeline, because you're not going to move the numbers if you don't change the pipeline of talent. So we kind of look at it holistically. So one element is, how do you expand your pipeline to maybe bring candidates in that you wouldn't otherwise have met? So how do you go to different schools? How do you, go to different, geographies to try and find diverse candidates? But then we also really start from some ground up initiatives, supporting organizations that are actually getting people into the flow of the pipeline who would never be there. So we look at organizations like code.org, Girls Who Invest, what have you, that are actually, creating new pipeline that didn't exist. And so we think that's important.
Yeah. I was just going to say, I think that great insights for funds as well, and corporates who might be listening in Australia, because I think that, there's absolutely push on there to start augmenting, some of the boards and some of the pipelines here in Australia. But go on. Sorry, cut you off there.
Yeah, then I was just going to, switch gears a little bit to ESG. So we think we're very uniquely positioned to be impactful from an ESG perspective, because as we think about, both us as an asset manager, but then us as a portfolio of software companies, in general, the carbon footprints of our businesses are on the smaller side versus an industrial or a manufacturing business. But, one of our goals and initiatives is to try and have all of our companies be carbon neutral during our ownership period. And, we've got an initiative underway now to have all of our companies measure their carbon footprint, because obviously if you want to reduce it and offset it, you have to measure it. So we've got an initiative across all of our portfolio companies to be able to, measure their carbon footprint and then reduce and offset it. But the other thing that's, I think, really interesting in the software space is that, we have kind of a notion of like software for good. Like, how are our products actually benefiting their customers, their communities, their end users, and how do we think about increasing the impact that our portfolio companies can have, in their communities by virtue of the different products they have. So, for example, we own a company, Finastra, that provides, among other things, core banking software used by most of the large commercial banks, globally. In the U.S. during the pandemic, we had this program that was called PPP, which was a loan program to help support businesses that were suffering during the pandemic. Well, in order to access that program, you had to do it through a financial institution. So, most businesses in communities of color don't deal with the banks that ordinarily have access to these programs. So we had Finastra, work with various community banking organizations to create a light version of software to help these banking institutions access the PPP program, and then to help their customers go through the application process. So, we think about ESG not just from the perspective of, how do we make our companies run more responsibly? How do we make them run in a more sustainable fashion? But we also think about how can our companies actually have, benefits to society, beyond what, the scope of their current operations may contemplate. And we ask our companies to, to kind of look for these opportunities. So we're really excited about what we think we can do. We're really trying to take, every business has a journey of maturity on ESG, and we're trying to take our journey and just go to almost like a third order level of, how we think about impact and environmental sustainability.
Yeah. And it's a conversation that's only going to accelerate here in Australia as well. So, and I'm sure you'll see that in the discussions you're having with your local superannuation funds and others. It'd be remiss of me not to, while I had you on this conversation, to talk a little bit about, valuations in the sector. we witnessed down here in Australia, I think probably what many say could end up being Australia's biggest tech deal potentially. $39 billion offer by Jack Dorsey's Square for Afterpay, which many probably consider a bit of a high valuation. We're seeing a lot of high valuations in tech deals across the US and more broadly around the world. What's driving tech valuations at the moment, and what's driving valuations within your segment as well?
Sure. Well, I think, as I talked about when, Vista got started 21 years ago, I think that, enterprise software was something everybody used, but not many people were investing in. And as we look forward to today, I think the investment community has very much woken up to what makes enterprise software incredibly attractive, and they're really very resilient companies. So again, we're looking at companies that have high recurring revenues, long-term customer contracts, very sticky solutions. It's very hard if a customer wants to change solutions, it's oftentimes very painful to do so. And these businesses generally have high free cash flow because they don't have a lot of CapEx capital spending. So, their conversion of EBITDA to free cash flow tends to be quite high. And so, 20 years ago, banks wouldn't lend to enterprise software businesses because they really said, well, wait a minute, the assets of the business are the employees, and they get on an elevator every day and leave. And what I think Robert was one of the first to see, and what people have come to realize, is that really the asset in an enterprise software business is the customer relationship and the recurring revenue. So I think part of what's been driving valuations in the technology and the enterprise software space is this premium that people are ascribing to recurring revenue. Most of our companies, they start the year, they already know where 90+% of their revenue is coming from for the year if they don't do anything different. Very few businesses have that characteristic. So you've got kind of that dynamic, and then you've got all of the different tailwinds to the industry generally. So you think about the proliferation of big data, you think about the development of artificial intelligence, robotic process automation, machine learning, the Internet of Things. These are all concepts and ideas that are driven by software. And so you've got an industry that's got very attractive fundamental characteristics. It's growing at 20% a year because of these various tailwinds that aren't going to change anytime soon. And so, you've really had the investment market kind of, really view these as very attractive assets. So, simple, supply demand economics, it's going to have an effect on valuations. The other thing that's really interesting about enterprise software is 98% of the companies in enterprise software are private. And so if you want to invest in enterprise software and you're a public investor, you've got a fairly small segment of the market that you can, invest in. And then if you really want to access the enterprise software market, you really have to look at firms like Vista if you really want to invest in the majority of the market. I'd say one of the interesting evolutions to this that we've focused on as you kind of think about valuations. Nowadays, there is a larger segment than there used to be of companies that trade on revenue multiples versus EBITDA multiples. Yep. So, 15 years ago, a lot of it was EBITDA multiple focused. Now there's a lot more companies that are revenue multiple focused. So as we look at revenue multiples, we really look at those multiples in the context of, the growth rates of the revenue. So we look at, we call it other people call it a PEG ratio. So, basically a growth adjusted earnings multiple. And so for Vista, while we might be paying higher revenue multiples on a growth adjusted basis, those multiples are fairly consistent with multiples we were paying 7 or 8 years ago. So, we might be paying a slightly higher revenue multiple, but it's for a company that is growing at a 25, 30, 35% clip. And I think, with the advent of, the cloud and, SaaS, hosted software solutions, you're finding more companies that can grow at, frankly, incredible rates when you look at, their revenue basis, because, with the advent of Amazon Cloud and Azure and whatnot, a lot of the infrastructure they need to grow, they're frankly outsourcing to others. And again, it kind of, reduces any sort of CapEx or other expenses they need to grow, and they can really invest their money on the go-to-market or sales side of things as opposed to the, the infrastructure of the business. So, I'm not smart enough to predict where multiples are going to go, generally speaking, but I think the elements that investors have come to realize that have put premiums on these types of businesses, I think they are going to continue to fetch, premiums to, other companies that don't have these attributes.
Yeah. I mean, look, I was going to ask you, but I think you've covered it there really, which is, how do you capture, it's one thing, valuations and what you're paying, but, the main thing is, how do you capture that future growth potential of these investments? And you covered it there, earlier with the way in which, you're able to work with founders, use the ecosystem, but also, they're on, talking and thinking about those revenue multiples as well. I mean, a lot of, funds and other investors do have a lot of tech and platforms, in their portfolios these days, because they've been such a great driver of, of value in portfolios. So, any further tips on capturing and, that future growth potential of these types of investments?
Sure. Well, and I think that's a great, great question. When we're looking at a software business that is maybe trading on a revenue multiple, it may have, no EBITDA, but it's got 200 or 300 million of revenue growing 30% a year. We look at that investment and we say, how can we help it grow at scale? Because it's one thing, when you're a 50 or a $75 million revenue business to grow 30%. Well, when the law of big numbers starts to hit you and you're now, a 300 or 400 million revenue business, how can you keep that growth rate up? And so again, as we've seen the software market evolve over the 21 years we've been in this business, and as we've evolved our operating practices and parameters, we've developed a whole set of best practices to help our entrepreneurs or our founders think about, okay, how do we help you grow at scale? So how do we stop you from slowing down growth as you get big? Or how do we take you from a 25% growth rate to a 35, 40% growth rate? And so you kind of approach those companies from a different perspective on what do they need. I talked about, we got a library of 100 best practices. Not every company needs 100 best practices. And so when we look at these companies, we say, where can we help this company inflect value creation given where it is and what it needs? In some cases, it might be on the cost side of the business. In other cases, it's, on all of them, it's some version of the revenue side of the business as well. But in certain cases, it's like, kind of how do we help you grow at scale? Because that is a unique dynamic that, a lot of companies don't know how to do because they haven't been through it. Some of these companies are 10-year-old companies that every day we have an expression that with some of our CEOs that were, founders, CEOs, every day it's the largest company they've ever run. And it's grown 20% a year. It's the largest company they've ever run next year. And so when we bring perspectives that we've learned from, being involved in many, many of these companies, we help them think about here's the future challenges coming for you as you're trying to grow at scale. And here's how, we can help you meet those challenges.
Yeah, great, David. It's been a fascinating conversation. I feel like we've actually covered quite a lot of ground. So thanks so much for your time and your insights.
I appreciate being invited to speak with you, and thanks again for your time as well.
Yeah, not at all. Thanks.